Hello, this is Ronnie. I would like to mention that I have a special offer of my services, and I would like to give you a few details about that at the end of the clip. If you're interested, please stay on. There is more to my service than just the coverage of gold and silver in US dollars. I do follow them every day in other currencies as well. And I also follow other markets that are inversely correlated with gold and silver. So there is a lot that you can still see and use in my service. So as I said, if you're interested, please stay on. After the clip ends, I'll be providing more information. Hope you enjoy the clip and wish you have fantastic trading week. Bye now. Okay, we are coming to discuss the chart of silver, and I want to refer to really an exciting chart that I have analyzed here. This is silver on the scale of 100 years, basically. We have it here. It's a 100-year chart of silver. Okay. Obviously, when you come to discuss such scale, what I'm doing, I am sharing with you ideas. Of course, I have absolutely no way in the world to promise you that this is correct. And I hope you take it in this spirit. You take it in the spirit that I'm tackling here a chart that is very interesting, and I'm trying to make sense of it. And that's all. I cannot go beyond that. I'm doing my best to provide an interpretation, and it's totally in the hands of Mr. Market to approve, yes, to accept, disapprove, etc., etc. So what you see here, by the way, this is log scale, but not inflation adjusted. Okay, so it's log scale, not inflation adjusted. And the lines that you see coming down here, the green lines, indicate periods where we had recession, depression here, 1932, yes. So that is to explain what you see on the screen, and that's the price, of course, 110, and you can see the effect of the log, yeah, the fact that it's a log scale. So I'm running up, and I see this, and I said to myself, boom, big correction. So that is not, in my opinion, what you see is not anymore part of what happened here. This was one flow, and that is reactive to the entire flow that we have seen here. We have obviously a similar thing in gold, and that's of course helpful when we can compare. The main, if you like, the main moves in each chart, and they sort of resonate together. That's good. So I'm supposing that this is one. Yes, this is one, and that will be the end of the second wave, or the second wave could have ended here. And now, from what you see here, it appears that we are surging into, basically, in the process of delivering a third wave, huge third wave. Okay, so the third wave might have started here. That'll give us a 1-2, in which case we take the entire stretch here as a third wave. Yes, and that'll be a fourth wave, and silver is coming up in a fifth wave. Okay, don't forget, this is a 100-year chart, so it may look not like a very big deal that silver is going up. It's going to top the previous high registered here, and that will terminate the 5-wave run that began from here or from here. Okay, in the case of gold, it is very clear in many charts that gold starts the rally from here. So if you like, it'll be sort of putting both of them on the same track if we take the interpretation that the second wave ended here. Yes, which is not impossible. So that'll give us a 1-2. These are the question marks, you see, because I'm not terribly sure. So if we take this as 1-2, it can stand, because it didn't really crash under the level of the end of the first wave, which is right here. So that'll be a 1-2, that will be a 3, that's a 4, and silver is coming up in the fifth leg. And now we would look at the actual price that I put it here on the monthly scale. You see, this is a monthly scale line style. So either we start counting from here, in which case that's going to be our 1, 2. That's going to be our 3. And all of that is going to be 4, and silver started the run right here, meaning the impulse wave. So silver now is in the process of an impulse wave that will take it above the previous high registered here at around 48. Okay, so that's the idea. That's the idea that corresponds to what I've just explained to you in the case of the 100-year chart. Now, if we go with a different interpretation, what we're going to do, we're going to take this as 1, 2. Do you remember the other alternative that we had? And all of that is going to be 3. But that's not going to change much in terms of the fourth wave for silver that most likely entered here, and silver is now in the process of surging to go back above 48 to deliver that fifth leg. Okay, so very interesting situation long term. Again, no guarantees. It is looking very, very interesting, and in due course we will see what Mr. Market has in mind. Let's now break step by step and take the weekly and go and see the current price action. So up to now, if you remember, I've been working with this being 1, 2 or A, B. The new interpretation is actually advancing the idea that this is the end right here is potentially the end of fourth wave, a giant fourth wave. And what you see here, the stretch, is not a third wave, it's the first wave of the new bull run that will take silver above 48. Okay, it is also very important to notice here that silver has not gone above the high registered here in July 2016, while gold has managed to climb substantially above this level. This is really important. I'll show you and I'll explain to you later why when we come to tackle the chart of gold. Right now, for short-term trading, everything that I said, of course, is very interesting as a background and is essential, really. But short-term, it is pretty clear that silver has now reversed, and it is going to stay in a corrective mode for several weeks. Yes, I am reasonably confident that this is the case. I have alerted you to the imminent reversal that is coming in silver, and this is as clear as you can get. This is a reversal week. That's on the weekly scale, and I don't think we should argue with it. This is pretty straightforward, and the wave count that I'm using is 1, 2, 1, 2, 3, 4, and that will be my fifth. Okay, so 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So please take the third here as an alternative wave count. This is a 1, 2, 3, but the very big fourth wave that I've just explained presumably ended here. But you can see that for the next few weeks we're in a correction. So let's not worry too much for now about the 1, 2, 3, or whether this is a 1, 2, 3, 4, whether this is a 1 and that's going to be a 2. If it is a fourth wave, what's going to happen is going to morph over time into almost certainly a very clear-cut triangle. And that's going to help us because we're going to come back and say, okay, we're going to have to start counting from here. That's what Mr. Market is saying. Alternatively, if this is 1, we have seen probably the A leg of that. And do not think that you're just going to have an ABC and silver is going to go back down. I would be really, really surprised. The reason why I say that is really based on the time scale. You see, this is clearly a move that took over 3 months. So you cannot expect 2 weeks correction and silver is going to continue to soar. This is very unlikely if this wave count is correct. What is quite possible, you're going to have an ABC, and you're going to have, in fact, I'm almost certain you're going to have an ABC like that because we have a 5-wave run going down, and that calls for a zigzag, okay, not a common. So you have an ABC, and then it's going to come back up, and generate another ABC. That is usually the case. And the idea is that it might pop slightly above this level, but probably not run far above that. And then it's going to come back. Either it's going to deliver another ABC, or it's just going to deliver a 1, 2, 3, 4, 5 wave run, which would be an ABC like that. Okay, in that case, it's not going to run above this level. It can do a lot of things. It can become very, very complex. But if we do have anything that looks like that and it doesn't run above this level, then we can take all of that as a second wave. And then after, yeah, I would say minimum 4 weeks. Yeah, we run up over 3 months. I would say we have at the very least another 3-4 weeks of going sideways here. Okay, so that's the general scheme of things on the weekly scale. Let's jump to the daily. Okay, so you're familiar with the advance up to here, and that generated, as you can see, even on the daily, a 1, 2, 3, 4, 5. Clear, very clear. And it's also very clear that it came straight from the top. It's not like you had an ambiguous situation. Where is the top? It was here, it was here. No, it was a bit higher. We have this case in gold. Yeah, so you are a bit lost because you don't know where really the top took place. But in the case of silver, there is no issue. The top is right here, crystal clear. And you have to count from here because the previous run was evidently impulsive, coming out of a fourth wave. So silver is very, very helpful in the case of the task of subdividing the price action and recent price action. So we have a clear march down here. Let me show you here. So that's the 60 minutes now. And I think that we have the A terminating here, or it might have terminated here, or might have slight push down here. And then I expect silver to actually hold ground around this level, around the 1790, 1810, and then have a nice bounce. And I would not expect in the coming week to see it going back to 19.7. No, not in a straight line, definitely. Okay, my expectation right now for silver is to do something like that. Just you know, certainly I would think that it'll be helpful in terms of the set of subdivisions we are working with to see silver staying under 19.2 or 19.10. Yeah, and then over time it'll become clearer. I think we're probably going for a bunch of ABCs here. So that's going to be our A, OA, then a B, and then a plunge. And then a plunge towards 17 or something like that. Yeah, and almost certainly silver will find support there. Yeah, there is quite a lot of support right here. You can see that clearly. And silver diving towards 17, that's a buy. That's a buy across the board. Also concerning the various mining stocks. And later on in the video, I'll show you some of them and the levels. And I myself would be super interested to jump into quite a few mining stocks, gold, silver. If silver delivers this kind of ABC, that'll be high confidence entry point for a rebound. Okay, so again, a rebound that is not, if you like, expected to top immediately above this level. In fact, you have had a few trading range. Yeah, we get something like that. You buy here, it runs back, it begins to knock on the door of 19.6, 19.4, 19.8, and you are reluctant to part ways with your long position that was so good to you. You don't have to. If you're feeling great about it, you don't have to. But one thing you should do, you should put trailing stops. Because if it comes back down, as I expect after knocking on the door here and not really making big progress, you're going to regret giving back all these nice gains. So please follow this advice. Put stops or trailing stop, whatever you want. And when it starts coming down, you'll be very happy because you get another chance to buy it around here. Okay, so that's silver. Let's now have a look at gold. But before looking at the chart of gold, I'm going to show you the 100-year chart. I don't know about you, but when I set about analyzing this, I've seen this chart a few weeks ago, and I had some thoughts. I was ruminating about it. I was sort of thinking what could fit, and this morning I decided to go for it, and that is the interpretation that I would apply. Again, no guarantees. Yes, we agree on that. We're just sharing ideas. This is log scale, not inflation adjusted, with the recession depressions, with this marked by the gray periods here. Okay, so this is 1, this is 2, and we essentially running up now, 1, 2, 3, 4. We're up in the 5th leg. There is a lot of support for this idea when you analyze the performance of gold and silver in various other currencies than the US dollar. And later on I will show you one very clear example, and that is really bolstering this interpretation, making it fitting quite well in the context of what we are seeing in various currencies. So this could actually work. That will be a 1, 2, 1, 2, 3, 4. We're getting up for the 5th. Don't forget, this is log scale, so it looks like it's getting smaller here, but in fact the move in the actual price could be quite a lot, and it's going to top, of course, the previous high registered here. So that is the 100-year scale of gold. Let's now go to our chart right here, and that is the monthly of gold and log scale. And I'm going to you wonder, where is the 1, 2, 3, 4? Well, it's right here. That's 1, that's 2, that's 3, and that's our 4. That's our 4, and I'll show you exactly where I think the 4th wave ended. You surely remember the interpretation that I had of an A, B, C, etc., etc. All this is now second priority. I think the priority, as far as I can see, is to treat this as a 4th wave. That's what we should do. And you can see that there is another thing that I told you is very, very important, is the fact that gold managed to completely obliterate the overhead resistance here, while silver didn't manage to do that so far. Hasn't managed to do it. And this is very important because we cannot, in my opinion, come and say that we have an A, B, C, A, B complete, and we're going down for a C in the case of silver, because silver hasn't really gone above the previous registered A level. Do you see? So that is another very strong argument for looking at the price action here and saying there is more upside. Yes, we are not ready to plunge. We are not ready to plunge. Even in the case of gold, you can say that because it did run above this level. When you look at silver, it's not possible. And since they move together, it is very unlikely that silver is ready to plunge hard while it hasn't gone above the previous A level. So the pattern doesn't work in the case of silver. That's why I think this is just one of the reasons why I think that there is plenty more upside here in the bull run that we are seeing in gold. Okay, this is the monthly. Let's go to the weekly. And there is no doubt in my mind that we have hit now a correction on a weekly scale. Now, you wonder, where is that 4th wave ending? I think it ended here. Yeah, I think it ended here. I could be wrong. If it ended here, which is not inconceivable, yeah, we're talking about this giant 4th wave, remember? If it ended here, what we're doing now, we are correcting all of this, which is perfectly possible. Okay, that will be, if you like, more in line with what silver is doing. In silver, you remember, we counted a rally of more than 3 months, and this is more than 3 months here. In the case of gold, it's coming to 4.5 months roughly, but that will put it more or less on the same footing with silver. So we are correcting all of that. Either way, we have a correction on the weekly scale now, and I don't think it's time to it's not time to load up now. there'll be a better opportunity to get in at a cheaper price in the case of gold. There is clearly an impulse rate that terminated here. You can see the reversal, and gold didn't have that spectacular final run that silver had, you remember? So it was already finding it quite difficult to climb once it hit this zone. And we have double reversal here, double reversal. We're in a correction, no question. We're in a correction, and let's now dive and see the details. So we have this one interpretation that's a 1, 2, 3, 4, 5. And we're getting down now for a correction that I think is likely to take gold towards 1,400. Okay, the first leg, I start counting from here. Sorry. Start counting from here, and I have 1, 2. Okay, I have 1, 2, 3, 4, 5. There is an alternative reading that would say there is a 1, 2, 1, 2, 3, 4. That's a 3. That's a 4. Just a touch down here and then bounce back. Perfectly possible, like we had in the case of silver. So my expectation for the next several trading days is to see, let me just get my arrow right here, to see gold doing something like that. It goes for a clear triangle. That's perfect for us. That'll be our A. That's B. Expect to see down. Expect to see down. It breaks towards 1,400. Let me show you here. That's the 2-hour scale. Silver breaks down through this support level 1,500, 1,480. That's a great buy right here. That'll be fantastic buy. Okay, you will see quite a few mining stocks would imitate this pattern, and you just go in. That's a fantastic buy around here. No guarantee it's going to get there. If it's very strong, it might not get there. It might start sliding. It might get the support that it needs around 1,450. No need to go that low. Yeah, it's also very important to observe how far it runs higher here, and I do not expect it to fly strongly above this level at this point. If it does, then the wave count has to be reviewed. It is important to see how much strength it's got now to rally, because if it is able to go and almost challenge the previous high, it is unlikely to go there, because the price action here would tell you that there's a lot of support, that it's unlikely to suddenly evaporate and go all the way there. If it is going for a very tight, narrow range of a B, then it tells you there is selling pressure here. People are taking the profits, and they might continue to take the profits, and at some point more sellers will join in. It's going to crack the support. It could really drop. Okay, so that's the way I'm looking at gold at this time. Hello. Hope you enjoyed the clip. I'm back here with some details about my servers, currently at 50% off for first-time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily servers, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek. just to keep you on track, to see a little bit, where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you, you should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year, but you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years. that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very, very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.